Okay, we are looking at the Medley industrial submarket where we have 990 industrial properties. Currently, we have 24 active listings for sale and 13 that have closed in the last 3 months. As far as leasing is concerned, we are 112 actively for lease in that market, 41 that have closed out in the last 3 months. As far as leasing pricing, we're at $19.16 a square foot. That's up a little over 3% from last year. The leasing activity, this similar trend, we're seeing it with this one and all the other submarkets where the expectation is sort of flat in the middle, and we had that big increase from the last 5 years, probably over 50% increase from last year. So these people that are coming out of 5-year leases are coming into what we might call sticker shock, because if they started at 12 and now it's at $19, again, that's a big change, especially if you're going to renew your lease. We're getting a lot of calls on that one, and we're basically telling them, listen, you're going to have to figure this one out because leasing is going up across the board. As a matter of fact, you can see that a lot of the landlords were thinking, well, maybe they should drop their price a little bit, and still ended up getting more simply competitively where they were. The expectation is now you're looking at about 4 months on average to get a property leased out there. As far as sales, we're at $273 a square foot, and that's up over a little bit, 6%. A little more aggressive than the leasing in terms of growth, so that might be what's dropping the cap rate. It's gone from 5.9 to 5.8. But in terms of sales, again, that similar trend line where, again, the prices are going to be flat probably into the middle of the year. So if you're coming out of a long-term lease and you need that space where you're just first time into that space, reach out to us. Again, now would be a good time to reach out to us and get into something, get something in contract while the prices are still flat between now and the third quarter of this year. As far as pricing, you can see that the older stuff, the 1 to 2 star, which tends to be the older buildings, some of the smaller stuff, is attracting some of the higher pricing per square foot out there in the market. Now again, going back to cap rates, they're at 5.8, they were at 5.9 last year. They are slightly up and down. Again, the expectation is that they are going to, again, drop somewhere in the middle of the year, which is in line with the sales price. As far as cap rates, which one's drawing the most? It's the older product, the smaller product that's getting the better cap rates that are out there. As far as the distribution, it's anywhere from 3% all the way to 8%. The bulk of it right there in the middle. So there's still some good trades, some good opportunities out there for the investors. And again, the other opportunity that we're seeing out there, that there was 56 properties that were sold, only 23 of them were listed for sale. And we know, statistically speaking, that people that tend to sell off market might get a little bit less than what they could have gotten on the market. So if you are thinking about selling, reach out to us, let us know. We can get you some pricing and a good strategy to show you how to get the most for your property.